Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So we are uh, we are kind of circling back to an idea that I just mentioned in a video this week, and it was about these breakouts on these leading tech names, right? Um, and I know Tesla. Everybody's familiar with Tesla. Everybody was probably watching Tesla. Everybody was, everybody heard about the news where they got included in S&P, and then they saw the stock up, and et cetera, right? But really, what I wanted to highlight was just how like the option setup was interesting, because a lot of people when they look at Tesla, they think of far out of the money options that looking for like a repeat of some of these moves where the stock basically goes up 50, 100% in a short period. So looking for like those quote unquote like YOLO crazy out of the money calls, right? For a setup like this, and actually for a lot of like these big cap tech names, what I like to do is like closer to the money spreads. So I feel like spreads are a great way to be able to manage risk, right? So you can participate on some of these like super expensive contracts by basically designing an option spread or call spread in this case that lines up with the amount of risk you want to put on, right? So if you're looking to only risk, say, like $2 to $3 net debit per strategy, then you can design a call spread that has like $2 to $3 net debit, right? So whether that's $5 wide, $10 wide, 15, 20 points wide, right? You can basically design the spread to fit the amount of risk that you want versus like if you wanted to like similarly go with just standard calls for like $3 net debit, you'd have to go 75, 100, maybe 200 points out of the money, depending on your time frame, right? So just completely different type of move that you would need for those contracts to really work, right? The other thing I just wanted to talk about quickly is about the timing of the breakout, right? And what I say, and one of the things I'm always looking for are like high beta, highly volatile names that go through a period of consolidation. Okay, that's just I've done videos in the past about it, talk about it a lot. It's one of those things where I really scream for because those to me can really lead to some fantastic option setups, right? Because when you have a stock, say like Tesla, that historically extremely volatile. Typically, options are very expensive, implied volatility wise, right? And then you go through a period of, say, about 2 months where the stock just chops around, doesn't do a whole lot. Then you see like that overall level of volatility start to contract, right? The average daily move is contracting. The overall level of implied volatility is contracting, right? And then what happens is when it does break out or break down, if it did break down, right? Then that implied volatility goes from contracting to expanding again. And so in addition to catching a move in your favor, right? So if you bought a breakout and it moves in your favor, then those options are going to gain from like a net delta perspective, right? But also they could gain from an implied volatility expansion perspective, where just demand for those options, right, getting bid up, implied volatility going up. So you can kind of get two different types of moves in your favor when you focus on these types of stocks that are in consolidations and then the resolution of the consolidation. All right. So definitely like a key idea when it comes to like options trading. And one of the things you have to note is like you don't always know when the consolidation is going to resolve. So sometimes in these scenarios, I like to err on the side of a little bit more time than a little bit less time because, say, had Tesla not broken out this week and you went with weeklies and it broke out next week, then you're kicking yourself, right? So sometimes you want to err on the side of more time, but the idea still applies, right? I mean, you want to be looking for stocks that are typically or historically volatile that have gone through periods of consolidation, and then you're looking for a break of that consolidation, to whether that's the upside or downside. Typically, that leads to a pretty good option setup. All right. So if you like this video and you're looking for more information on option swing trading or more information on option event trading like earnings or biotech events, please follow up with the link in the description of the video for more information on options to play. I hope you have a wonderful night. Stay well, and I will talk to you all tomorrow.